Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, October the 23rd. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that I talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. All right, and remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, shooting on location here from George Bush International Airport in Houston, Texas. I had a crazy day yesterday, was in New York, running around, went to Cheddar, and which was at the New York Stock Exchange, and then ran over to the NYSE and went on the set of Fast Money and chatting it up with Guy Adami and stuff like that. So check out some of my stuff on Twitter. I threw all that out there. But and that's why I didn't have a daily market commentary yesterday. Sorry about that. And today I'm going to shoot from the airport. Hopefully this works out pretty good. I was thinking I wasn't going to do it today, but with all of the action going on, I had to get something out to you guys. I felt like, all right, so let's talk with the overall markets. We've got crude oil moving down by about $3. Now, we've been seeing these builds in crude oil, right, in the inventory numbers. Now, it's a lack of demand, right? We've got 11,000 barrels a day being produced here in the United States. We are basically toggling back and forth as #1 producers of oil in the world with Russia. It kind of goes back and forth there. That being said, we are massively producing oil and we are not consuming it. So that being said, I was saying that crude oil should come off, and it has. But we're starting to also see some of these earnings come out and not looking as great as we would have liked to be seeing. And that could be another reason why we're seeing so much supply in crude oil, is from the lack of demand from the manufacturing side. They may be starting to see the slowdown before we are in the economic data, and therefore pulling back on some of those things that would go into the manufacturing process. So crude oil not looking too good. I would expect it to start to slow down here. This is what I talked about a while back, is that I thought it would come down to the point of control and kind of settle down. We are right in that wheelhouse. So in between two Fibonacci levels, that should settle us down a little bit. I'm still under the assumption, or under the belief, that crude oil is going to stay right around the $65 a barrel area. All right, on to gold futures. We would expect gold futures as a flight to safety coming in here, with the Dow Jones Industrial Average down over 500 points earlier this morning. That is when people pull money out of the stock market, throw it into something like gold futures, which is a flight to safety, safe harbor. You either usually put it in cash, hope for the dollar to gain strength, or do something a little bit more aggressive and go into something like gold futures or bonds, which bonds moving higher. I've talked about this as well. I don't think that the Fed is probably going to continue this interest rate increase, especially with some of the earnings we're starting to see come out. That's showing a bit of a slowdown in the overall economy. Now, when I say slowdown, I don't mean that we are anywhere close to a recession or any of those metrics even coming to fruition right now. What I'm seeing, though, is that we are at this trajectory that's not robust, which is what we want right now. We've had these booms and busts. We would like to rather see a slow trajectory where the economy is moving along nicely, but not at a rapid pace. So right now, that's kind of what we're getting right now. I think people were getting a little overzealous on the expansion in the economy. I've been talking about this. We're starting to see the numbers come in a little bit lower, although they are good numbers. They're just not as good as we were expecting. So bonds moving higher. I would expect the Fed to really start considering slowing down on the interest rate increase and maybe even taking a pause. All right, let's talk about VIX. Yesterday we were noticing something that when the market was coming off, we were actually seeing the VIX come off as well, which is a little bit of a sign that we may have already had this correction and the market's ready to turn around. So the VIX coming off again today with the market still in negative territory. Actually, it's up a little bit, but well off of the highs of the day. I think we're going to start to see the VIX come out a little bit, and we may have seen at least a near-term bottom because of the way the charts are starting to set up here. We can see that the Dow Jones is still down 250 points, albeit it was down 500. Came down to test the 23 Fibonacci level and the point of control. So we've touched that and now starting to move up and away. I don't know that we're going to see these all-time highs by the end of this month anyway, but I do think that we have now formed a bit of a bottom here. We still need confirmation, but it's still looking like a nice little bottom there, at least in the Dow Jones Industrial Average. Then we go over to the NASDAQ, down over 78 points right now, but taking back half of those losses since the early morning and overnight sessions, we are back above the 200-day moving average. That is going to act as support. Came down, also tested our point of control. That is a good thing, you guys. We like to see those kind of moves. I've even been telling my father to get more involved in the FANGs. You know, he is 70 years old. He is not involved in much tech, but I think that this is a time for even somebody that has a very low risk tolerance to get involved in some of these FANG stocks, or maybe even across the board the FANG stocks, because they are going to be considered more of the bellwethers or the blue chips of the tech sector. All right, on to the mini S&P here. Again, similar situation, down 28 points, but they were down well over 50 early this morning. Now the market rallying back right there at the point of control. Market may be signaling to some people that there's some panic in the water, but I think that this is a good correction. I can't say that enough, and I think it's actually a buying opportunity, especially for long-term portfolio investors. This would be a time to dollar cost average. If you are a senior and are looking to try and get some yield, and you're looking for maybe like that 5% return, not getting it because the overall market is actually sideways to down across the board from the beginning of the year. But having said that, even since 2000 and around 2010, a little bit later, maybe even 2013 till now, the market actually is across the board in the E-mini S&Ps flat, maybe even slightly down. The rest of this rally that we've been seeing in these past 5 years is due to the tech rally. So if you are a retired person and don't have the FANGs in your portfolio, this would be a real good time to seriously considering adding some of that, at least in a small dose, maybe 5% of your portfolio. All right, on to a couple of things that I've done. NVIDIA is a trade that I had on. If you remember, when we were rallying, we got that spike in volatility. Volatility has continued to come into this market, but what we are seeing is that I got the directionality right, and I had on those November 300 calls that I shorted, and I sold those for 58 cents, bought them back this morning, sorry, for 11 cents. Didn't play around with those yesterday because of the market direction. I wanted to let those things ride out because my eBay is starting to hurt. So I covered this NVIDIA, and then in eBay, if you guys remember, I have a long position in here from way back during this earnings here. So I am long eBay at $36. I've continued to roll short calls out against that. I've done a collection of just slightly over $2 there. So my break even is $34. Obviously, I am well away from that, but if you remember, I sold the 36 calls, rolled them down to the 35, rolled them down to the 34, but I've got earnings coming up here very shortly. So what I'm going to be looking to do is cover, and I did cover my short calls in eBay. That was the covered call for my long stock. And that being said, I originally sold those November 34 calls for 68 cents, and I bought them back for about 5 cents. I think it was something like that, 62 cents or 65 cents. Bought them back this morning for 5 cents. I'm not going to roll those until after earnings and see what we get going from there. But I am going to ride out this position through that binary event. So that's all I've got for you guys today. I'll be back on the normal routine tomorrow. I'm going to be home here in a couple hours anyway, so I'll be back on the routine and hopefully getting you these daily market commentaries a little bit earlier in the morning. All right, so that's about it for today, other than if you can't take that, take it easy.